Of this economic recession, investors are always looking for the most bang for their buck.
So one question is, where can investors go to find yield? Joining us this morning in studio is our financial consultant, Andy Barkate.
Do not yield, Andy. Tell us exactly where they can go.
Well, you know, we talked about this morning about the difference between Treasury bonds and municipal bonds,
Okay.
and why the yields are so different. Historically, Treasury bonds, because they're taxable, have a higher yield than municipal bonds, which of course are tax-free.
Okay.
Well, that's been kind of flipped around the last couple of years, which is kind of ironic. More money's been, well, first of all, let's back up a second. Bonds move up and down in price. They're not risk-free investments like a lot of people may think they are. Interest rates cause bonds to go up and down in price. So does their potential default risk.
Okay.
Now, what we've seen happen since the stock markets have been so volatile the last couple of years, and actually the last couple of days haven't been any different, really, have they?
No.
We've seen a lot of money fly into more riskless or risk-free investments, such as Treasury bonds.
Okay.
And that's pushed the price up and the yield down. The 10-year Treasury bond, actually the 30-year Treasury bond right now is paying somewhere around 2.75%, which is historic lows. The 30-year municipal bond is paying about almost twice, well, not quite twice that, about 3.5%. Now these are small differences, but the rationale is money is going back into Treasury bonds to fight risk. And then again, there's still that concern about default risk within some of the municipalities. Remember the California budget mess we had about a year ago? Which,
right.
Who knows if we may be going through that again. There's
always going to say that we're still
we're still not, we never quite get out of that, do we?
Right. It doesn't seem like it.
No, but there's still that concern about potential default there. So you're seeing money kind of stay out of some municipal bonds in light of going into tax-free, in light of going into treasuries, and that's keeping that yield different. So very interesting times we live in.
I mean, do you think that people should then be making the move towards municipal, or do you think it's going to flip back to the way it was?
That's a tough one to know. I mean, are we going to have problems in some of the municipalities with them being able to pay their interest rates? Nobody really knows that. A lot of very prominent analysts believe so. But at a bare minimum, do we know what's going to go on? I don't think anybody can tell you that. I think you can flip a coin. But again, we live in very interesting times. So as an investor, at a minimum, you should be paying attention, close attention.
All right.
All right, very good.
Andy, thank you so much.
Thank you.